Stocks had a massive pullback this week following the FOMC's decision to cut rates by 25 basis points. The Dow Jones extended a 10-day losing streak, the longest since the 70s. So we'll talk about whether or not this correction is the start of a longer or bigger decline downwards. Actually, today, just we're talking on the 20th of December, the stocks are rebounding a little bit. But what is actually going on? Chris Vermeulen is breaking down stocks, Bitcoin, energy, outlook for his best play for 2025. And he'll be sharing all this with us right before the new year. Welcome back, Chris.
Hey, thanks, David. Always a pleasure.
Chris, of course, is the chief market strategist of thetechnicaltraders.com. You can revisit our last interview with Chris, linked down below. In our last interview, Chris, from a couple weeks ago, you made the call that Bitcoin would top near term at around 108,000. Perfect call. Let's start with that because Bitcoin did top at around 108,000 before sliding back down to below $100,000 now. So we're at 97,000 as we speak today. Might move by the time we publish this in a couple hours. But let's pull up a chart on Bitcoin.
Sure.
Chris,
yeah.
let's take a look at, because that was a great call. Walk us through, again, your rationale for calling for 108,000. What did the trend line say? And what is it telling you now?
Sure. So the way we came about the upside target for Bitcoin was we really are just looking at the chart pattern.
Just for some context for the audience, you made that call a couple of weeks ago when Bitcoin was just under $100,000. Actually, it didn't even pierce 100,000 yet.
Right. Yeah.
So we were just on the up climb. Yeah.
Exactly. So several weeks ago, quite a while ago, we just looked at this chart pattern, and the chart pattern here, this is the most conservative chart pattern. We had a beautiful run up, price flag sideways, which is known as a bull flag pattern. That first section there is the halfway point. A bull flag is the halfway point, knowing the second half should move up. And I use Fibonacci extension, and really we just take the low, we go up to the high of that rally. That tells us the upward momentum. And then we go all the way down to how much momentum it had pulling back. And this pretty much gives us some of these targets, depending where we go here. This is a few different levels. And so was telling us where we need to be aware of this chart. So we had a first target at the 618 level. We also had another target at the 108 level, which was right up in here. And we hit both of those. And that's simply based on Fibonacci extension. Typically, when you run up to the 618, usually it has a pause. And if it pauses, we push even higher. We saw that actually back over here. We had a move up, it took a pause, and then had the second half of the move. But this is a very simple type of analysis. Bitcoin was kind of one of those trades. I haven't traded Bitcoin in forever, for about a decade. And I bought it a long, long time ago, but it was based on this weekly chart. And so this weekly chart was telling us that, hey, this is a huge cup and handle pattern, a big bull flag pattern, and we should expect that big pop and rally to the upside. And of course, the monthly chart gives us very clear, definitive levels of where these are. And these were the key levels here. The 87,000 was where our first target was. 109, 108,000 where the second target was. We hit that and we pulled back. And so it's always good to step back and look at the bigger charts, the bigger pictures of these trends to get those targets. And Bitcoin is a very crowded trade. Everybody watches it. Everybody moves. It's a big school of fish. And that's why I like it, is because once it starts to move, the school of fish moves very quickly. And of course, we got in just as it was starting to break out. And that was a 40% move. We hit 40%. This week we got out and stepped aside. And so now we're just waiting to see what Bitcoin's going to do, build another chart pattern. I'm in no rush to trade a lot of Bitcoin. If we get another perfect chart set up, I think there's more upside. I think Bitcoin could actually go to about 160,000 as long as the stock market doesn't top out. If the stock market tops, I think Bitcoin's going to get pulled down with it.
Did you say 160, 160?
160, yeah. Big move up, yeah.
Okay, we'll talk about that. But actually, before that, I've heard that because it's already breached $100,000, it's reached 108. That $100,000 now is the new support. Do you buy that?
Not really. I mean, yeah, it'll work a little bit as when if I just flip to the daily chart, it is a whole number. So it's hanging around this level. Obviously, we've been seeing it flip and flop right around this 100 level. So it's trying to act as a support level there. We'll see if it can get some traction. I think we could see Bitcoin, just based on this price action of the last rally. I think we could see actually Bitcoin pull back quite a bit actually from this point. Let me just draw. I think we can see Bitcoin pull back to about 87,000, maybe 80,000, down to this little sweet spot first. I think there could be a bit more of a shakeout, but you're right. It's holding at that 100,000, give or take a couple grand. As when we were stuck under it, its resistance, we're somewhat stuck at it now and just trying to figure out, is this, going to be support or is it going to be resistance? And we'll just have to wait and see. But 100% measured move was hit on this chart. Typically, after we hit 100% measured move, we see a pretty big pause or pullback that could last several weeks. So I think I'm not excited about Bitcoin at this point. I'd love to see it pull back and chop around. The longer it trades sideways here for a few weeks, the better. It could provide another opportunity to get long on the next breakout and could be another big move. But right now it's just kind of a shot in the dark. Technically, it's kind of put in a short-term top, and I don't really want to hold it.
If you want to read more about the U.S. economy and the latest economic data releases, head over to Ground News. Today's sponsor, Ground News, is a fantastic news aggregator that brings together news sources from across the internet into one easy-to-use place. Take a look at this story, for example. Key Fed inflation measure shows 2.4% rate in November, lower than expected. If you scroll down, you'll see all the different news sources that cover the story in one homepage. Saves me a lot of time from having to Google individual sources if I want to read multiple articles on the same story. On the right side, you'll see a bias distribution meter, a very unique feature that shows you what percentage of these articles covering the story are left-leaning, center-leaning, and right-leaning on the political spectrum. On the bottom, you'll see an ownership meter. It shows you what percentage of these stories are owned by large conglomerates or independent media sources. Take a look at Ground News by going to my link down below, groundnews.com/David Lin, or scan the QR code here. To get started, you'll get a Vantage plan for 50% off, $5 a month. That's under $5 a month. Great deal, great resource. Check out Ground News. Okay, so what you're saying is there's a short-term correction coming before we hit 160. You're not calling for that to be the next move from this
Correct.
continuous momentum. Okay. So tell us about the timeline for Bitcoin. What can we expect going into January and then eventually 160?
Well, as long as the stock market doesn't top, I believe if the stock market does top come January, February, I think Bitcoin's going to get hit very hard and move back. But just looking at this chart pattern, I think I think it could potentially happen. It will be a very explosive move. That's kind of how this asset class moves. I think it could be like 2, 3 months from now, we could see that actually pop and scream higher. That is an extreme upside potential move. It'll be the crowded play. Everybody piles in and be way up here. And it'll be, a parabolic type move. I believe if it was to hit this level, it's going to reverse and come straight back down. I think it's kind of that we might be getting into that perfect storm scenario where everybody wants to pile into it. It's the one asset class that's performing really well. Gold's kind of stalled out. The stock market has got people nervous. Although, the NASDAQ was at all-time highs like 3, 4 days ago. A one-day pullback on news has everybody thinking like it's the end of the world, but it's not. We're still in a technical uptrend for stocks. But I would say Bitcoin, if we're going to hit this 160 before I think the economy turns, it's got to be in the next like 2, 3, 4 months.
Right. So the timeline for 160 is 2, 3, 4 months is what you're saying.
Yeah.
Okay. Walk us through the logic of 160,000. The number. How did you come up with that?
More or less, you take the Fibonacci move, and you can this is a giant cup and handle pattern. So when we look at this chart pattern, a cup and handle pattern is it forms a cup, and then you have this little teacup handle. And when you have a major pattern like this, you can stack the height of that cup to the upside. So you take the height of that move. This is obviously very rough analysis, but you can stack it up here. And eventually it stacks up that you can have a cup and handle can be 2, 3, 400% the depth of the cup. And so more or less, if we were to take extreme highs and lows and stack it up and use Fibonacci, it ends up giving us a level of about $160,000. That's kind of like a blow off phase, maximum potential move on the next leg up. So that's kind of what we're looking for in terms of, if we're looking for this type of momentum I'm talking about, like this little pause right here after this strong move is very similar to over here. You hit a target, it has a pause, and then it explodes for the second half of that move, which would send this skyrocketing higher again. And then, of course, if that happens, it's probably going to come back down
Mhm.
to this level, which happens to be that 100,000 mark that you mentioned that could act as that support level. So right now it's building volume through here. It's building a level where investors are changing hands in it. And so, that's kind of the analysis is just this cup and handle pattern, this monthly chart, and this type of asset, how it can have these explosive moves where everyone can pile in and drive it higher. It's a global mass market move, and you don't know how far it's going to go. That's what makes it dangerous. It can rally straight up, it can drop straight back down. It's just because it's the school of fish. They get super FOMO one day or one week, and then complete fear the next, and they all move out. So it is obviously aggressive type of trade, but that's the mentality behind it. Is right now we're just moving with the school of fish. The trend is up, and everything is stacking up to say, hey, this could go like parabolic and have this insane spike still.
So you said that this rests on the assumption that the stock market will do well in the next 3, 4 months. I'm assuming that means you think that these two asset classes will remain correlated with each other into 2025, correct?
Yeah, I think Bitcoin could do a little bit of what gold does. So I think the stock market, I think we could see the stocks continue to push higher into the end of the year, into January. Stocks might start to fumble, and we might actually see money move into Bitcoin. If Bitcoin's holding up or moving higher, money's going to come out of stocks. It's going to go to whatever asset's leading the way. We might see Bitcoin continue to rocket higher, and gold, I think, move higher while the stock market starts to struggle. I think January is going to be a very difficult reversal month for the stock market, but Bitcoin is a little bit like a defensive play sometimes. I think money could go there and keep pushing it higher while the stock market struggles, meaning I don't think the stock market is going up for 3 or 4 months. I think it's going to stall out in the next 45 days or so.
Yeah.
But Bitcoin and gold, I think, will act as a bit of a defensive play and potentially move higher.
Well, let's talk about the stock market now. Great segue. Let's pull up an SPX charts. Now, you made the call on my show. That was early December. That the S&P has maybe what 2%, 3% more of room to climb before we see a nasty downturn in January, which is what you're talking about. Now, I'm wondering if that's already happened because if you take a look at the chart since we spoke in early December, the S&P's already gone up more than 2, 3%. So that call was good. The Nasdaq's gone up even a bit more. I think 5, 6% on the Nasdaq since early December, and then we had this nasty, nasty drawdown, 1 day drawdown this Wednesday after the FOMC announcement. So I'm wondering if what you're calling for January has already happened. The timeline just pushed up, or maybe not.
I mean, we have seen that move up already. We've already seen those indexes push.
Yeah.
I think the markets have shaken things up, and this is what they do the best. So we see some of the strongest 1 and 2 day pullbacks in the market during a bull market. We are still in a bull market. I wouldn't say it's a very strong one, meaning the market internals are weak. The market's going higher, but it's not like a raging bull market. But what we see is this very sharp pullback. It's the market trying to buck you off. It's the bull trying to get rid of you before it wants to go higher. And this was a lot of people were nervous. And everybody jumped ship. They all got out of their momentum stocks. Magnificent Seven stocks got hammered. It's where everybody is. They're all momentum trading. And as soon as it starts to sell off, they all bailed. So it created this huge drop. Not only that, but today, as you and I are speaking, which is December 20th, we actually pierced this pivot low right through here, which is or we didn't quite pierce it here on this chart, but we pierced this low over here from the high volume day. And that flushed, I think, the stops out. A lot of people said if it breaks, this big drop, we want to get out. And so we saw that. We saw the market dip down, shake things out, and now it's starting to reverse. And we saw this with the VIX. The VIX was up 74% in 1 day. The saying is when the VIX is high, it's time to buy, meaning when fear is high and everybody's just jumped out of stocks, sold everything, then that's when, if there's no more selling left because they all just bailed, you want to get in. It should be a bottom. And that's what we're seeing here is this flush out low and this move higher. The SPY also shows, the SPY ETF shows it even better. This is the chart I was meaning to show right here is this significant pivot low that we saw a month ago was what we saw gap down this morning. It ran all of the stops. This is the nice thing about SPY. This is gauging regular trading hours, 9:30 to 4. This is when the majority of stops are triggered, not so much the futures one. This is the important washout. So everyone got stopped out this morning, and now the market's putting this massive reversal, an exhaustion gap down, strong rally. It's going to be an engulfing bullish candle pointing to a big rally. And that's what we've been talking about. We have a cycle low. We got the market starting to move up. And I think we're going to see a big rally. And the market literally just bucked everybody off on one piece of news. So that's kind of where I think we're going.
Are
And I
you
think stocks are going to rally back up to the highs, potentially
okay?
push to new all-time highs by the end of the year.
Well, that's 10 days from now. So you're
Yeah.
within the next 10 days, you're expecting stocks to go, the SPY to go back up to 610, SPX to go back up to 6,000,
Yeah.
right? Okay. Well, actually, we're almost at 6,000. It would be like more like 6,100 would be the peak. So when you see a big downward move in a single intraday trading session, like what we saw on Wednesday, what's
Yeah.
your initial thought process? Do you panic like everybody else and just offload your entire position? Or do you short like everybody else? Do you just do nothing? Do you start buying? Like, what's your thought process here?
Yeah, so there's a few ways to do this. So, for example, if we were to look at so this is my trading strategy. This tells us, the QQQ, for example, tells us when money's flowing into equities, we want to own equities. We trim off partial profits. We took off about 10% a few days ago, just before the market crashed. The trend is still up in the stock market. And we've got money flowing out of bonds. Money is still into the stock market. If we look at the SPY is still on a buyer's signal, meaning the bars are green, telling us this is still the trend is still up. So people were panicking yesterday or 2 days ago when this crash happened,
Hmm.
and I don't see it as a bearish sign. So we've got tools and indicators. I don't have loaded on here, but we can see when there's panic selling above the masses. And we saw on that big down day a panic selling ratio on the New York Stock Exchange of 8 people hitting the bid, meaning people just hitting the sell button. They don't care what price they get. They just 8 shares hitting the bid to every one person buying on the ask. And if that's over 3, that's telling us the majority of people are dumping shares. So 8 is a standout low, meaning we should see within 2 or 3 days a major standout low in the stock market. And when I say standout low, it should be a standout low like one of these. And so that is the setup that we've been talking about and watching for. And I believe the stock market is going to push higher.
Hmm.
There's no need to panic. Like when we look at the SP 500 futures, we were hitting all-time highs. Same with the NASDAQ, just like 2 days before it. So a one-day pullback does not change a trend, especially when it's on news, right? And people will just get way sucked into the news. They see their favorite momentum stocks crashing, like Tesla down like 9% that day. Um, Panic is the worst
What
thing
does
you
it?
can do when it comes to investing.
What
You have to
happens if
have a
it triggers like
strategy.
certain, like if it breaks below certain support lines on a 1 day move? Do you think to yourself, "Oh, gee, it's time for bearish momentum"? Then.
I mean, we have triggers in place. So, for example,
Hmm.
like we took 10% off, or we had 10% target on Nasdaq. It actually came down during that day and triggered our protective stop to close the rest of our position out. We're out of the Nasdaq, but we're still long the SP 500. So we have thresholds because you never know how far the market's going to fall. For all we know, it could have had 4 more down days like this. And so we have position management in place, which most people don't do, which is if the market moves far enough in one direction, it's going to trigger a protective stop saying, hey, let's lock in gains here before things get ugly. If the market turns around, it might generate a new buy signal and we just get back in. But if it keeps free falling, we're going to be an idiot to keep holding on to it. So not only did price reverse for that day, but it hit one of our risk tolerance levels saying, hey, this is a pretty severe move based on the NASDAQ. We got to lock in gains, closing the
Right.
rest of that position. So that's what can kick us out of a trade. If you're managing risk, you're going to get kicked out of trades. You're going to have to re-enter at times. But the nice thing is if the market keeps collapsing, you're not holding onto a position and watching, months worth of gains evaporate. And you can always get back into a market. It's like click of a button, you're back in. So people for some reason think if they sell, they've missed out or they're done. But you can always buy back, even at a higher price. It
Yeah.
doesn't matter, right? You can get back in.
So the blue line, the lower bound blue line that we see here, what is that? Yeah.
That's just the 50-day moving average. You can see we're just kind
Okay.
of bouncing and staying up that 50-day moving
When
average.
something breaks below a 50-day moving average, what is the play usually? Is it a case by case basis thing?
Well, I like price to stay above the 50-day. Generally, I want price to stay above it for the trend to continue,
Yeah.
but it can close below it. Like I use a lot of different analysis in terms of So we would need price to close below the 50-day. We would
Hmm.
also need, money flows in different asset classes. We need to start seeing utilities and gold outperforming, and we need to start seeing the trend reverse on a short-term basis. So
Yeah.
there's other things. We have to take cycles, money flow, momentum, all of that into account. It can close below the 50-day. It really means nothing. But if other stuff are saying, hey, not only has it closed below it, but you lift the hood to the market and you realize, holy cow, there's money's flowing out of the stock market like crazy, and everybody's moving to defensive pockets or cash, even like the US dollar. That is a bearish sign. But right now, we're not really fully seeing that just yet.
I'd like to show something interesting for you and the audience. Can you pull up a Dow Jones chart, DJI? And I just want to highlight the fact that the Dow Jones has been on a really long losing streak the last week. We finally broken this losing streak today and yesterday as stocks rebounded. But if you start taking a look at what happened mid-December or early December, it's been on a 10-day losing streak.
Yeah.
Now, that has not happened since 1978, which is extraordinary when you think about it, this long of a losing streak. Now,
Mhm.
on a magnitude scale, obviously, we've had 2020, 2008. Those things, those events have drawn down the markets a lot more. But if you just take a look at this magnitude of length from time, what's your initial reaction here?
Yeah, well, I mean, the Dow Jones, I mean, it's a small pocket of stocks, right? So if that pocket of stocks aren't performing very well, it's going to pull on this index. Just like the NASDAQ is super heavy with Magnificent Seven, if those seven stocks or even one of those stocks does well, it drags that index up. So this actually bleeds in perfectly to, I think, what is causing a huge chunk of this, which if we go and look at the energy space, of the markets here, we've had a 14% pullback in XLE, the energy sector. And these are some heavyweights in the Dow. And so that has been on like a 10, 15-day losing streak as well. So this, I think, is pulling the Dow down along with utility stocks. They've been kind of out of favor because people have been moving out of utilities and wanting to get into growth stocks. All the ARK ETFs are up, Bitcoin, everybody's aggressive right now. So money's coming out of the energy space, which are big dividend players. They're a big part of the Dow. And so I think that's kind of bleeding into
Mm.
this extended move down. Again, if we just pull up XLE on this particular chart, you can see uh, the extended move in the energy space. And I think this is just the beginning for the energy space. I think the energy space is about to have a huge implosion. Energy stocks are going to get hit very hard. And this is going to
Yeah,
pull
let's
the
talk about
Dow
that.
down. This is going to kill dividend stocks like dividend ETFs. It already is. This bleeds over. This kind of one sector is killing the Dow. It's going to kill all the dividend paying ETFs. It's going to hurt retirees the most. They don't see it coming, I don't think.
Yeah, okay. Since you're talking about that, so energy stocks are down or going down, and then that's going to lead into or bleed into the dividend stocks that a lot of retirees are holding. Okay, good point. Walk us through your thesis here, your bearish thesis on energy stocks.
Yeah, so right now we've got this big divergence. We've got oil has been going down for the last couple of years. It's bouncing on support above a critical support level. All I think is we need Trump to get in, start drilling holes everywhere in North America. We need one piece of bad economic data. I think we're going to see oil fall out of bed, break down below this level and start a landslide towards about $45 a barrel. What the crazy part is, investors are all heavily weighted, expecting World War III, and they're expecting huge oil pricing, and they've just been loading up on energy stocks, expecting this to go higher. And I think this is where there's this huge divergence. If oil breaks down and the economy goes weaker, there's a whole bunch of like pivot lows on this chart where we're going to see the energy sector stocks just collapse. I think we're going to see like a 40-50% haircut very easily in this sector, unwinding. And these purple lines across this chart. These are all dividends. This energy stocks pay huge dividends. But what I saw this happen back in 2008. You see energy stocks get absolutely clobbered. And not only that, but they start when oil goes down, they stop making the big profits, and then they start cutting their dividends. And as they cut dividends, some of them stopped giving dividends. Period. They get pulled out of funds, and there's more liquidation. So this could be like a big tipping point for the whole energy space to be out of favor for a year or two in a very big way. And because these are dividend paying stocks, retirees
Right.
are going to feel this the most because everybody buys the same stuff. The majority of the stock market money is like people, investors 50 years plus, which means they have a ton of money, they're close to retired, or they are retired, and they're all in the same thing: utility, blue chips, high dividend funds. And when they all panic, which is generally all at the same time, they sell off the same stocks and they crash. And I have this example here that shows this. This is the SP 500 at the top, and then this is the SPY dividend, high dividend fund. And as you can see, just like the Dow and just like the energy space, retirees holding the high dividend stocks are down almost 9 times more than if they just held the SP 500. They don't realize the risk they have in this sector, and so huge damage is being done. And another perfect example is during COVID. The top chart is the SP 500. COVID crashed 36%. Retirees just sitting there holding blue chips saying, hey, I got dividend stocks. I'll take my 4% yield and be happy with it. It'll help counter the losses. Well, they lost almost 50% of their money being in what they think is like the safest, easy, no brainer investment. So this is like a ticking time bomb for retirees. They all hold the same stuff. It's way more volatile than the stock market. They have all these misconceptions about what kind of risks their portfolios have. And I think
Mhm.
things are going to get really ugly for retirees if they don't do something, because the energy space is about to get hammered. Dividends are about to get crashed, dividend stocks in general. And all the retirees are going to bail out at roughly the same time and send things down. So this is like, I've been talking about this for a long time, but we're getting closer and closer. Eventually, we're going to have that big financial reset. And it's either you're ready for it or it hits you and it'll be almost too late to do anything. A lot of people don't take action until it is kind of too late. They're already down 40, 50%. Like, what do you do at that point? You've already done, the damage is done.
Okay, just to clarify here, so you're not against all dividend stocks. You just don't like the dividend stocks in the energy sector. Am I correct there?
No, this is just dividend stocks across the board. Majority of big
Oh, okay.
investment capital is in dividend stocks. It doesn't matter what they are. A lot of the dividend stocks, though, are energy. They
Mm.
have big profits, right? So, my whole belief is, my point is, if the stock market is going down, just like a falling tide, a falling tide takes all boats down. You do not want to be holding stocks. Period. Doesn't matter if they're dividend, high dividend. In fact, high dividend carry more risk than like the overall stock market in general. People don't know that. So when the tide's going down for stock market, just get out and go to a different asset class, which leads us to, there's some way better opportunities, I think, for 2025, where I think there'll be low volatility and lots of upside potential.
Yeah, we'll talk about that in just a minute. But when you say that January is bad for stocks across the board, and the correction that we got on Wednesday after the FOMC is not it, what are we talking about, Chris? This downward correction that we're talking about in January? We're talking about 20%, 30%. Like what does that look like to you?
Yeah, so I think January will be kind of like I think we'll start to see this market potentially go back up to these highs, maybe poke to nominal new highs. I do feel like we're going to start to see it eventually flatline. You have a series of things moving up. Eventually, we're going to have a break to the downside, and it's
Hmm.
going to start the downward trajectory. I'm not saying January is going to crash. I'm just saying January might be the top. We might see the highest high here. We might start to see
I
it
see.
trade sideways. And then I think 2025 is like, okay, we're going to have a series of like bear flags and it's going to unwind. I do feel like we could see like a 35, 55% pullback in the SP 500 over the next year or two. I don't know if it's going to be like a flash crash like a 2008 where it's just a waterfall sell off, or if it's going to be more like a 2000 3-year bear market, multiple big waves and bounces to the downside.
Yeah.
We're not going to know obviously till that happens. The key is just being prepared and having an action plan to avoid or take advantage of it.
Okay, so it's interesting because you said that Bitcoin might see 160K on the upside after a series of corrections, but that implies a 60% increase from current levels. Now, you're not saying the stock market's going to go up 60% in the next 3-4 months, same time period for Bitcoin, right? There's a bit of a divergence there.
Right. So what I think will happen, and this is I think the stock market is going to try and claw its way up to the end of the year, might go a little bit higher into January, and then I think we're going to get into some big volatility. The stock market will start to be in this topping range.
Hmm.
I think at that point, Bitcoin and gold, as the market starts to get nervous, I think Bitcoin and gold are going to want to continue to move higher while the stock market is kind of flatlining
Okay.
and potentially there's going to be a divergence. They're going to become a safe haven play for a short period of time. But once the market starts to break down and starts to break like a low and another low and a couple of these lows, and there's panic,
Yeah.
that's when we're going to start to see, Bitcoin and gold start to get pulled back, and then they're going to all move in sync together, and they'll all start to correct. But there will be this sweet spot where Bitcoin and gold should continue to perform while the stock market is actually struggling.
That's interesting. So you're expecting Bitcoin and gold to outperform the stock market in
Yeah.
2025. Okay.
This is just like January, February. This is like just
Oh,
January, right?
okay. Just January, February. Okay, let's
Yeah,
clarify
this is
that.
just a very short term. I think we're coming
Q
into the next 2 months.
Q1. I guess we'll follow up in Q1 to see if the what your Q2 outlook is gonna hold for us. Okay, let's turn now to things that you do like. You mentioned that there are low volatility plays for, I guess, retirees seeking to preserve their wealth, not through dividend stocks. What else?
One of the plays that I really like. I mean, I'm Canadian, so I play the currencies as well. I think one of the best plays here. We've seen the U.S. dollar move up, and if you look at all the other currencies, they're all moving down and to the right. As a Canadian, or really as any investor, I think it's kind of very similar if you're not in
Mhm.
America. Is to look at the Canadian dollar conversion. I really like the U.S. to Canadian dollar, so I have all my investment account is in US dollars because I believe the US dollar is going to continue to rally. And based on the chart pattern of this and what's going on, I think oil is going to go down. When oil falls, we tend to see the Canadian dollar fall. It typically follows that commodity a little bit. So I think oil is going to collapse, making a weaker Canadian dollar. When we have chaos in the stock market in the world, we see the US dollar you want to rally. So I think we're going to see this big play here. Based on this chart pattern, I think we could see about a dollar 70 to a dollar 73 exchange, which could be a record. I don't know how far it goes back if you've ever seen that, but there's like a 20% upside move just to hold the dollar currency in a brokerage account. You don't even need to put a position on. You can also buy though the dollar index ETF, which if you're already in US dollars, it gives you even more potential upside for it to take advantage of it. So I like this play in 2022 when the stock market sold off. We saw the US dollar itself, US dollar index rally about 18%. If we look at this chart, you can see we had in 2022. This chart doesn't quite just pull this up here. 2022, we saw the US dollar just scream higher. And this was a play that we traded with an ETF. It moved up 18%. The biggest pullback, these pullbacks along the way, the biggest one for the year was only 4%, less than 4%. So that's what I like about currencies. And I believe we're starting another run higher in the US dollar. So to me, this is like a low volatility play. The crazier the world gets, the worse things get, the stronger the dollar should be. And it's a great way to take advantage of things. And if the dollar goes up, it's going to hurt. It's really going to hurt the economy. It's going to hurt multinational companies because now everything in US dollars is super expensive for other countries to buy. It's going to hurt commodities like gold. So this is just, I think, a part of that cycle, a cleansing event. And this is one of those low risk volatility plays that you can slide into and not have to like really panic about huge moves.
Yeah, I'm glad you brought up gold because historically, gold and dollar don't move together. And this year was a bit different. There are many months this year that they've moved in tandem. My question is why you think gold will still perform well in 2025 if you think the dollar is going to do well.
Okay, yeah, well, yeah. So I don't think gold is going to do well in
Oh,
2025.
interesting.
So
Okay, so you think, okay, hold on, let me just, you think the stock market will do the worst, gold maybe just a little bit better, and then Bitcoin really well, but okay.
So my scenario, what I believe is going to happen is, I think we're going to go very similar to 2007. I think we're going to 2008. We're going to see gold pull back with the stock market. I believe we're at this point. Stock market is going to correct. We're going to see gold pull back 15-20%. And then once the stock market has cleansed and gold's pulled back, I do believe gold will be a top performer. It might not be till late next year. Who knows? It depends how long this bear market phase lasts. The 2008 one was a very quick correction. It was like an 8 month or so, somewhere in there, 10 month. So I think maybe by some point in 2025, gold will put in a bottom and
Yeah.
then become one of the most exciting assets to be in, I think, to the upside, especially in the precious metal miner space. But when the stock market pulls back, gold is going to pull back also. Gold is only, I think going to move up just a little bit over the next 1 to 2 months as the stock market is cresting, about to put in a major top. So I think gold is going to be sideways to slightly higher for the next month and a half. After January, I do think almost everything is going to go down, and the dollar will be one of the most conservative, safest plays that there is.
How do you feel about the Canadian dollar? We're both Canadian, and I'm bringing this up because there's a bit of turmoil now in Parliament. Christopher Freeland, finance minister, just resigned this past week. Cabinet ministers, even within Trudeau's own cabinet, are calling for Trudeau to resign, forget the opposition. So this is interesting. They might call in somebody else to. They're talking about calling in somebody else to take in Trudeau's place before the election. So lots going on in Canada. How do you feel about the CAD?
I don't know what's going on in Canada. I don't follow politics too closely because it is just absolutely ridiculous, in my opinion. But I think we're in for a world of hurt. I think Trump and tariffs could cause a problem. I think we've got all kinds of our own mess here with Parliament, and we need a change of hands, change of guards here for sure, shake things up. But I do think that the bigger cycle at play is the economic cycle. I do think we're going to see the Canadian dollar fall in value based on the U.S. And I'll pull up the Canadian dollar because that's what you were just mentioning. If we look at the Canadian dollar, I think we're going to continue to see it fall in value. So if we
Yeah.
look at the monthly chart and go way back in time here, I think the Canadian dollar is going to go way back down to 65, 62, somewhere in there. It's going to sell right off, and it's going to be pretty painful. I think we're going through a very painful. I think we're going to have a big recession, and it's going to kind of feel like a mini depression for a lot of people. There's going
For
to be a lot of
Canada?
pain. I think it's going to happen. I think in most countries, to be honest. I think it's not
Okay.
just specific to one place, but I feel like Canada's already in a depression because it's run so crazy, and we got a lunatic running the place. But I guess every country could probably say and feel the same thing about their
Mm-hmm.
their people. So
A lot of it may have to do with the fact that U.S. 10 years has just been rising a lot faster than the Canadian Treasury.
yeah.
Not, not well, not it's not called Treasury here, but yeah,
Yeah, our rates are falling faster because of the way our mortgages are, our banking, and our structure here. Um, yeah, so it's going to be very interesting. We have a little different dynamic. I think our housing market could get hit very hard, a little quicker than in the U.S. potentially.
uh-huh.
Just the way the mortgages expire every 3 to 5 years on average, and the rates are still really high, and people just can't afford the new rates on renewal.
Yeah, that is tough. Housing market. We'll talk more about the housing market in another episode. I think we've covered a lot of ground already. But final question, Chris. The we've talked about what to do if you're a retiree. Stay away from dividend stocks. Stay away from energy stocks. What if you're somebody young who wants to speculate? We talked about Bitcoin. Is there any other sector besides Bitcoin that I guess people with a little more risk appetite would want to venture into for Q1?
I don't really feel like um, I don't feel like there's an asset just because you're risky. I don't think there's anything you can just jump into. I think the key here, if we just look at this is such a simple, basic cycle. We have right now, I believe we're at peak maximum risk. It doesn't matter what you put your money into. I don't think there's a lot of upside. So just because you're risky, doesn't really open the doors, I think, to anything else. I mean, there's not a whole lot there. I mean, to get involved, and I think if you want to be more risk adverse, I'd be more inclined to potentially look to buy an inverse ETF on the energy sector once it breaks down a little bit more over the next month. Come January, it might break down and create a bear flag, and that would be the opportunity to buy ERY, which is a 3 times, I think, inverse ETF, and you could make 50 to 70%, on a beautiful washout, huge sell off in the energy space. That to me would be more of an exciting play. That's the one that's standing out as a very high volatility play. It's not quite time yet. The energy space just fell 14%. It's ready for a bit of a bounce and pause, but the next leg down will be the start of something much bigger. As you and I have touched on this before, I believe we're in this kind of stage 3 topping phase. And once we break down, which I think is going to come in 2024, this is when we can buy inverse ETFs in general to profit from the falling market. But if you're aggressive and you want to do something right now, you kind of got your hands tied because the markets are still up. I don't think there's much upside, and nothing else is screaming that it's just going to take off. Like the Bitcoin
Mhm.
160, I wouldn't get caught up on that. I highly doubt it's going to happen. It already hit our measured move. It's pulling back. To me, that move is done. It's just if it was to go parabolic and go ballistic, that's the next spike up. But don't like I know people are going to take that 160 and be like, "I'll buy Bitcoin," but that to me is like that's actually a bad trade. That is just a prediction going forward. We don't have
Mhm.
a new chart to draw that very clearly where that next level is just yet.
Okay, so Chris, I want to thank you so much for being a part of the show this whole year. Good timely updates. People can check out a last interview. So, where can we learn more from you in the meantime? Study your work, learn how you trade.
Yeah, sure. Well, people can go to the link below in the description to my website there, the Technical Traders, and you'll see that I share videos of the markets every day with subscribers before the opening bell. And really, what you're doing is you're learning how to follow the markets. You copy the trades that I do, which are ETF trades, and I provide portfolio allocation, the entry, the targets, all of that stuff. And so, really, I ride the coattails of the markets. You ride my coattails, and I really give you the best possible trades because I'm managing my own capital with it. And it's a great community. We all chat and we can communicate inside. And again, you can just go to the link in the description and check it out.
Excellent. Thanks very much, Chris.
All
Merry
right. Thanks,
Christmas,
David.
Happy New
Always
Year, and yeah, we'll speak again soon.
great. Take care. Bye bye.
Thank you for watching. Don't forget to like and subscribe.